Leverage is simply what allows you to be able to open large position in the forex market while you're trading. Now, what this means is that if you have $100 in your trading account, there's a way you can leverage on that $100 and be able to make large positions in the market, which can result to big losses or big profits. Now, the thing with leverage is that as you can make big losses, you can make big profits. So it's like a double-edged sword. I'm going to explain more about leverage in this video, but before we continue, if you're seeing for the first time, my name is Divine, and what I basically do on this channel is document how I trade and as well show you the message behind my strategy. If you want to be seeing content like this, I want you to like, subscribe, and as well drop a comment in this video. I'll be right back. Now, in Forex, there are basically about two types of leverage. Now, the first leverage is the leverage that the broker provides for you. And the second type of leverage is leverage that you provide for yourself. I'm going to talk about these two types of leverage in this video. But first, let's talk about the leverage that the broker provides for you. Now, once you open a broker account, there are basically different types of broker accounts you can open with a particular broker. Let's, for instance, say XNET. XNET have 4 different accounts that you can open with them. Now, they have the standard account, you have the pro account, you have the raw spread, and we have the zero account. Now, each of these different accounts provide different type of leverage for that account. They have 1:2 leverage on XNET, 1:50, 1:100, 1:500, 1:300, 1:700, and 1:unlimited. Now, for you to be able to use this leverage that broker provided, first you have to have an account with that particular broker, and then you must either be using any of these accounts with that broker. I'm going to explain to you what this 1:2 means, 1:300, 1:400, and so on and so forth, what it actually means. Now, once you see a broker who is providing you a 1:2 leverage, it's simply saying that for every $1 you deposit in this broker, you can borrow $2. Again, when you see a broker that provides you a 1:50, it simply means that for every $1 you deposit in this broker, you can borrow $50. Now, when you see a 1:300, it means that for every $1 you deposit in this broker, you can borrow $300. So, and so on and so forth. Once you see a 1:to anything at the front, it simply means that you can borrow, if you have $1 in this broker, you can borrow anything that is in the front. So if you see a 1:to 2,000, it simply means that if every $1 you have in this broker, you can borrow $2,000. But the thing now is that you can't be able to see that money physically in your trading account. Now, it only gives you a purchasing power to open as many positions as possible that was that amount that you are leveraging on. Let me recap. You will not be able to see this money in your trading account. For instance, say you're using a 1:500 leverage. Because you deposit $100 doesn't mean that the broker is going to credit you with $500. No. Now, what the broker is going to do is that they are going to basically give you the opportunity to trade as if you have a $500 in your account. That means if you have $100 on your broker, maybe say a standard account, and you're using a leverage of 1:500, it simply means that you can be able to trade as if you have, or open as many positions as possible as if you have a $500 in your trading account. But the thing is that there's a requirement. And the requirement for you to be able to grow this fund or be able to open position as big as this fund is for you to understand that there's a requirement for it, which is referred to as a margin requirement. I'm going to explain what margin requirement means in this video, but before that, you need to understand what margin is. Now, margin is simply the amount of money you have in your account that can be able to allow you to open a position in the market. That means the amount of money you have in your trading account that can allow you to open a position in the market. Now, a margin requirement is simply the amount of money you have in your trading account that can allow you to open a particular position on a particular pair. What this means is that every pair have different amount that you need to have in your account for you to be able to open a position in that pair. For instance, let's say you have a $1 in your trading account and you are able to open a GBP pair, but you're not able to open a USD CHF pair. Now, it simply means that the amount of money you have in your account does not meet margin requirement for you to open a position on USD CHF. But that amount of money too can allow you to open on GBP USD. So let me recap again. You need to have a margin requirement, and I'm saying that margin requirement is simply the amount of money you have in your trading account that can allow you to open a position on a particular pair. Whereas a margin is simply the amount of money you have in your trading account that can be able to allow you to open a position in the market. Now, for you to be able to borrow this money from this broker, you simply need to have a requirement which is referred to as margin requirement. Now, what margin requirement does is that, let's for instance give you another example. Say you have a $100 account in your trading account and you want to trade GBPUSD, and the margin requirement for you to open one position of GBPUSD is simply $1. Now, what this means is that ordinarily with $100, you can be able to open 100 positions on GBPUSD. Now, if you're on a leverage of 1:500, you can simply be able to open 500 positions on GBPUSD using the margin requirement and as well the leverage you have on your account. I hope you understand what I'm saying. If you understand, drop a comment in the comment section. If you don't understand, still drop a comment in the comment section. Let me know what you don't understand. Now, what I'm trying to say is that if you meet up to the margin requirements, then you can open as multiple positions as possible. But both of us know that you wouldn't want to open a position that is worth you cannot open 500 positions at the same time. Now, what they do is that they allow you to reduce that position in a form of lot size. Now, instead of you to be able to use, instead of you to say, I cannot use 0.0, you cannot use one lot size on a $100 account. If you leverage on it, you can use one lot size on a $100 account, which is very, very risky. Leveraging or using leverage is very risky, or using high leverage is very risky, and you can actually lose all your money, or you can receive a margin call. Now, a margin call is simply a call from your broker telling you that you're about to blow your account, or you're about to lose all your money. Imagine they'll call you, else, bros, you won't lose all your money. I'm joking. But margin call is simply a call that your broker give you signal that, oh, you're about to lose all the money in your account, which is very, very, very risky. Having said that, let's talk about the second type of leverage, which is simply the leverage that you provide for yourself. Now, the whole aim of trading Forex is to make profit. And if you're new to Forex, you have to bear in mind that for you to be able to make massive profit or big profit, you simply need to have a bigger account or bigger capital in your trading account. Now, what it means is that if you have a $1,000 account, you should simply be looking for how to make little profit from that money. But if you have a 100% account, a 100K account, you should simply be looking to make 1% or 2%, which can be big money for some persons and can be small for some persons. So the amount of money you make on a $100 account, making 1% is different from the 1% on a $1 million account, or maybe on a 100K account. So it's a quite different thing. And the goal most times is for us to see how we can be able to raise big funds for you to leverage and have big capitals. Now, for you yourself, the way you can be able to leverage or provide leverage from yourself is to simply use a prop firm. Now, a prop firm is simply one of these companies that can give you money to trade, and you can make profit from them to fund your own personal account. The whole aim of prop firm is to simply for you to be able to leverage on their own money and fund your personal account. Now, what this means is that let's assume this is a prop firm, and this prop firm company, whatever name it is, I don't know, is telling you that, oh, come, I can give you this amount of money, but you have to deposit this little money with us. If you pass this account, we give you back your money, and then we give you the money you're looking for, and whatever profit you make, we share it together. That's what prop firm basically is. And it's a way you can use prop firm to leverage and make profit for your trading capital. Another way you can make profit or make leverage using this second method is for you to simply get a business or try to see how you can build a business that's going to generate funds for you, so you can be able to use it to accumulate and build a large capital or large portfolio on your trading account. One of my goal in this my YouTube channel is to simply see how I can raise traders who are not trying to flip their accounts from $10 to $1,000, but instead who are built or based on trying to see how they can consistently make 5% profit as they trade. And for you to be able to make that 5% profit, or for you to be able to utilize that 5% profit very well, you need to have a bigger capital with you. So 5% a month on a $100 account compared to a 100K account is quite different. In fact, this one can pay your bills, but this one cannot pay your bills, and it looks as if you're not winning. So one of the best things you can do for yourself is to see how you can leverage on yourself and see how you can provide capital for yourself. That I just mentioned two ways. First is trying to build a business that can generate money and you're able to fund your account. And secondly, is to see how you can be able to use Profirm, buy a Profirm account, and see how you can grow that account and make your first withdrawal on that account. And then you can deposit your personal account and then grow continuously. I think this will be all for this video. If you find this content very useful and valuable, I want to drop a comment, and as well drop a like on this video. I'll see you on the next video. Peace.